Welcome, everyone. Every other month, we have themed events. And this month's theme is opportunity in data-driven tech. And I'd like to welcome a friend and colleague, Jeff Hansen, who will be hosting you for the next hour to talk about opportunity data-driven tech and why data is driving the hottest areas of investing now. So I'm going to hand it over to you, Jeff.
Thank you very much. So let me just move on and tell you what we're going to talk about today. So our agenda today is we're going to talk about data tech and why it's the most exciting part of innovation. Just so everyone knows who I am and who don't know who I am. I've had an entrepreneur that's had many successful exits. I've been a VC. I've been an industry analyst writing reports on different market sectors. I've been a growth coach for over 500 companies over the last 20 years. And I'm currently an investment banker and I'm an active angel investor. So how do we decide that this was the theme for this event? And generally, the way it works is about 4 or 5 months before the event, Dalzell comes to me and says, you know, people are asking about this and that, and we'd like to have an event. And she threw out some things. Do you think it should be AI? Do you think it should be Internet of Things? Do you think it should be, you know, security? And my answer was yes. And the reason for that is I'm constantly doing research on what are the deals that are going on, what are the areas that are hot, right? And recently I had an epiphany when she came to me and said, well, I'm looking at all the deals that are happening in the third quarter of 2022. And everyone's complaining, well, deals aren't getting done or things aren't going on. But then I noticed 5 sectors that were having actually increases in investment, increases in exits. And I'll explain that on the next slide when I talk to you about the areas. But basically, they all have this commonality of data and ecosystems around data. And I also, in my day-to-day work as a VC, or sorry, an investment banker, I constantly am looking at what the deals we're doing, what are the trends driving those deals. And once I had this epiphany, I looked at the deals I've done in 2021 and 2022, and 60% of them had this pattern of data that was driving them, and it was driving this not only interest, but higher valuations. And you see this little bubble with the oil thing. The new terminology is that data is the new oil. And what that means is anything to do with, like, oil empowered so many industries, you know, through the 60s and 70s, et cetera. It's because it was a raw resource that enabled so many different industries to do certain things, whether it was making plastics, powering engines for transportation, et cetera. There is a very valuable raw resource that was being tapped. And you can see this nice little chart here. It shows that is from IDC, which shows the growth of data storage. And you can see the number, you can't really see the number. It says 172 zettabytes. You may not know what a zettabyte is, but it's unimaginably large. And you can see that that curve is not a linear curve, it's an exponential curve. And as, so all the deals I see with VCs, I say, are you still investing despite the recession? And they'll always answer me and say, of course we are, we have to, we have all this money on hand. I said, but we're being selective where we put it. I said, where are you putting it? They say, where the demand is. And demand is coming from here, and I'll show you why. So when I give you that definition of data tech, what am I talking about? I'm talking about these sectors. Data analytics, customer data platforms, data security, data governance, Internet of Things. And all of those actually work collaboratively, actually, because they're all happening in parallel, and what happens in one is driving interest in the other. Very important example is Internet of Things is you have sensors that are gathering data. That data, to be valuable to the organization, you have to do analytics, you have to do security. And if you're collecting the right kind of data and normalizing it in the right way, you can do AI and machine learning and start to automate things in your business. So that's how these things all come together. And used to be, we talked about software as a service over the last 10 or 15 years of being a driver of so many companies. And you're seeing a lot of companies that are doing what we call data as a service. So they may still have software as a service applications, but they're finding ways to monetize the data that's coming through their systems. So why now? And I always tell companies, you know, when you're coming to pitch investors, tell them why now. There's urgency about investing in your opportunity now. And I find most of the pitch decks I see really miss that point. You know, why is now the exciting time? Meaning, why is it fun for you as an entrepreneur? Why is it fun for the market and your customers? And why is it going to be fun for the investor to invest now? And here are the patterns I see in data. So first of all, we're reaching critical mass, that there's enough data, enough applications, enough devices, all interoperating, that opens up opportunities. We're talking about extremely high growth rates with anything to do with data. So if data is growing exponentially, all the things that leverage that data will also grow exponentially. We're seeing a maturing, emerging tech, and that we now understand how to better process data, to do AI automatically, to do a bunch of different things that were really in the labs like 3 to 4 years ago. It's becoming mature very, very quickly. There's these new business models, so it's SaaS plus usage plus a whole bunch of new business models, which I'll explain later. And then there's these technologies have a huge impact on the customers that are using it in terms of transforming how they do business, how cost effectively they can make decisions, and, you know, be smarter in how they do different things. I won't go through all these numbers, but essentially you can see there's some very, very big numbers. And with every big number for all those various sectors that I'm talking about, you'll see that the compound annual growth rate is, you know, just so you know, the IT sector is going to have a down year. It's going to do between 4 and 5% compound annual growth this year. Most of these technologies are going to do between 30 and 40% growth rate. So that's always the easiest for a technology company to deliver to a market that's growing at that pace. That means there's high demand and it's a must-have technology. You can see we're talking about billion-dollar markets, and even if you carve out very unique vertical niches or specialty niches within that, there's still could be a huge billion-dollar market opportunity for a small company. And you can see that at enterprise adoption, 97% of enterprises are focused, even though they may be eliminating a lot of IT projects in the recession, they're prioritizing all the data-oriented ones, because data is becoming the lifeblood of those businesses. So let's talk about what's going on in terms of deals. And I could have put up 30 charts of all these sectors and all the deals I'm seeing, but I just siphoned it down to these 4 so I can keep it simple. And then we can move on to the expert panel I have later, because they're probably infinitely more smart than I am about what's really going on. But you can see that AI and machine learning deals have been going up. And in fact, I didn't have the data all compiled. I was rushing today to compile the 2022 data, but it's actually even higher than 2021. And the exits are really interesting to look at, in that any of these companies driven by AI and machine learning tend to have fairly early exits. So that means they, instead of taking 7 years to reach that exit, they're reaching in 3 or 4, and some of them are being bought in post MVP. And you can see on the bottom left there that these are the valuations for those early stage companies. And as they get into Series B VC, you can see that the valuations are going up very highly. And related, so, and then I see similar trends in IoT and security, all that. But the one I wanted to highlight to you is when I looked at all the different SaaS sectors for basic applications, they all showed a curve where they went up during the COVID and then they started to plunge down. I want you to look at this business intelligence and analytics M&A deals. went up, it started to come down, and now it's driving high into the last quarter of 2022 and into 2023. So I'm not showing the value of those deals. I'm just showing the number of deals to show you the level of activity that's going on. Because people are all prioritizing their acquisitions and their investments for where there's high growth, especially when we're going into a recession. So the thing that's important to understand as an investor looking at these opportunities, many of them will just have your standard SaaS subscription. Someone will have more quite different app where it's entirely usage-based, or it may be a blend of usage and license. And then some of them will provide a managed service where they'll have some people doing stuff, providing professional services alongside maintaining something that's continually getting smarter and smarter and smarter with your data. And the last category, which is pretty unique to AI and machine learning, is there's emerging business models that are based on the capacity, our power of the servers in terms of the computational power being applied to give you better decisions or better automation. And that's an emerging area of determining the pricing for those products. So to give you an idea what's been going on in terms of AI and machine learning, because that's probably the most exciting part of all this, that all of this stuff cascades into AI and machine learning. Everyone talking about ChatGPT. This chart in the upper left shows how long it took various companies to reach 1 million users. ChatGPT took 5 days. Okay. So ChatGPT is, and a lot of these new technologies that we're talking about are what we call generative AI. So you can see all of the investments that are going on. And obviously there's always going to be a bunch of VC money going in, but I'm an angel. How can I play? Well, you should look at this. Not raised outside equity is 33% of the companies in that space. I don't know who's calling me right now. So you can look at all the different categories of generative media on the upper right, and you can see the amount of generative AI VC investment going on. And then the other area that I'm very passionate about is sort of what's going on with IoT, and that's creating this sort of fourth industrial revolution, which on the bottom left here shows that once you automate everything with technology and you have this digital data, you can do intelligence, and then you can also start to apply AI to make all that stuff happen faster, smarter, better, et cetera. And that's where there's a lot of interest for these technologies. Now, I mentioned earlier that there was a bunch of exits. The thing that's interesting about these AI technologies is you can't imagine some of them getting to being a billion-dollar company by itself. So that is why there's so much exit activity where they're being acquired as opposed to building it to a mega company. Because with data, there's all these ecosystems of different technologies around a certain problem. And eventually there's going to be large companies that are going to own that problem and then try to aggregate these technologies and to better serve that. So when you ask a seed entrepreneur that's using any of these what their exit is, hopefully they understand that. But as I mentioned, I have much smarter people than me to explain what's going on. So we have an expert panel today with 2 entrepreneurs I highly respect. We have Darshan Kaler, who's founder and CEO of Tradable Bits. And we have Troy Angrignon, who's founder of a company called Productive AI based in Silicon Valley. I think you saw their bios on the posting for this event. Let me start by saying that what makes them unique and why I've chosen them for this panel is they're not only at the leading edge of these technologies, but they're both very, very unique personalities, where Darshan's an engineer that really understands the impact of the technologies he's applying. And Troy is the mirror image of that. He's a sales guy that dives deep into technology to understand the change it's driving in order to drive how he can be better at selling that technology. So that makes them very, very unique individuals, a unique perspective. And can we make it easier to see their faces from
Do I have to speak?
So the first question is for Darshan, and I want Darshan to explain the history of his company and why it was so exciting when he saw how data was being used that made him jump into the arena with his current company.
Sure. Can you hear me?
Yep.
Yeah. Thanks, Jeff. First of all, Tradable Bit's been around for just a little over 12 years. Self-funded, never raised any money, so it's a bit of a kind of a weird scenario when I'm in front of a panel of people that might want to invest. The main thing that we've done, my background is engineering, as Jeff indicated. In 2010, I was director of Olympic Services, and at that time, there was something very compelling that was happening with media and content. Everybody became a broadcaster. So this really was an interesting time where you'd almost have to look back, where people just probably were converting from flip phones to a digital phone that we have, we've gotten used to today. And a lot of the broadcasters were very concerned about content and how to control it and so forth. And fast forward 2 years later, we started a company called Tradable Bits, and its main purpose was to really understand social media and how the digital world was actually transposing the way we are and what we do. And in 2013, a platform that we rolled out, we had 24.5 million monthly active users on the platform. And we were able to understand how social media was kind of connecting with each other. And the most interesting part that came out of that was the way you are on, let's say, Facebook or Instagram and Twitter, LinkedIn, and what you buy on Amazon and how you buy a ticket, for a concert or sports. These are all your digital presence, but that doesn't make you, all of a sudden just makes you what you buy. So from 2013 and on, we focused on a group industry that's specifically tied to sports, music, and entertainment, and formed what we call fan-based marketing. And the intended purpose of the technology was to understand how a fan and their interactions tied to the brand that they're interested in, and all the digital footprints that they might follow through from social interactions, purchasing behavior, and can you make something out of that? Now, fast forward to today, we have over 41 million unique profiles on the platform, specifically tied to sports, music, and entertainment, used by the likes of Live Nation, Ticketmaster, Whitecaps, Canucks, Trailblazers, you name it, to understand the fans, to market smarter. And that's really, as Jeff indicated, the oil is really this crude of data that's sitting in there, and then maximizing that and creating fuel out of it. So that's in a nutshell what Tradable Bits does. Jeff, you're talking, but I can't hear you.
Yeah, that marketing smarter concept. I mean, it's so simple, but it's, taking all these technologies and then siphon it down to that simple concept. Can you explain how you got that epiphany based on all the data you were looking at and how you were using it?
Sure. So we rolled out a product earlier on called Tradable. Now, in a short period of time, we had about, this was in around 2012. And the intention was to create a search engine for you personally and all the things you want to connect. And what we realized that within a week of running it, first degree, second degree connections, because we had about 2,000 people that connected, we were able to connect and graph almost 80 million people and all the attributions on it. And so what makes it really interesting is that, we have a web of connectivity. In today's world, there's a ton of privacy put in place to kind of restrict a lot of those connections. So you can't easily just graph that. But businesses have a ton of data. They just haven't realized the way to connect that data and what's important associated with the attribution on each of those particular data points. So for us, in the last 10 years was really just focused on improving and refining and finding that signal against the noise, because we have so much data now that it's glutton for punishment for a lot of businesses today. They don't really know what to do with it. They build data warehouses, they build all kinds of different things to collect, and all they've done is buried the signal. And so companies today tied to whether it be machine learning or data analysis or any of those BI tools that are being put in place is to really surface and the most essential data points and insights. And today's world is probably more associated with insights, where several years ago it was all about a build and collect.
Yeah, and so we can also make all the investors online envious here. You did this all without outside money, right?
Never raised any money. So we're in a unique scenario because I am an engineer, and my other co-founder that we brought in is a database architect. So we kind of built it from the ground up, started to generate some income, and found how to make money. Today we have almost 50 people globally. We have a subsidiary in Australia. We sell services, the product in North America, and it's starting to expand into Europe.
Let's move to Troy. Troy is some of you may recognize Troy because he used to live in Vancouver and work for Business Objects. He decided to go down the valley and work for a bunch of cool tech companies down there. He could have chosen to work at any company because he's an accomplished salesperson and he would have been in demand. But you decide to throw all your eggs in this AI bucket, and you're mentoring and coaching and advising a number of startups in the AI area. Why did you jump to that area?
Thanks, Jeff. Yeah, it's nice to be back and see some familiar names. It took some exploration. I had been at Cisco at the time, as you and the team know, and we were working on, at the time, I kind of came in on cloud, and we were working on selling kind of software-defined networking and infrastructure and things like that. But then we sort of got this product dropped on us, which was this machine learning based cybersecurity thing. And I literally remember the day where they said, we're going to give you this tool, it's machine learning. And I said, what's machine learning? What does that even mean? And it was this kind of moment of like, well, what does this thing do? Well, it ingests 2 trillion network flows and does all this analysis on it and looks for anomalies and maps out all 20,000 of the applications in the enterprise in like 4 hours. And I just it blew my mind. And it was one of those moments where, sort of like 16 years ago when I saw AWS S3 and then, the compute launch and saw what it could do and how cheaply it could do it. It was one of those kind of similar moments for me. So when I got out of Cisco, by that point, I was kind of hook, line, and sinker on AI. So I looked at a few other sectors, but ultimately I wanted another big wave to ride, because I had been on the kind of cloud computing wave for basically 16 years. And I thought, well, this is definitely a big enough wave that I can jump in there and learn a lot, do a lot, and have a ton of fun doing something big.
Thanks, Troy. So to give everyone a sense of being at the leading edge of these areas, tell me about something that's happened to you in the latest little while in terms of what's it like to be in the middle of the tornado of this exponential growth of data and AI. So I'll start with Darshan.
So, we're in a unique position. There is a massive constricting of how data can be used, utilized, and collected. And even though it's accessible, and then there's so many of them that you can kind of pick, businesses are now impacted by, the way they marketed in the last 10 years. So you almost have to kind of get some foundational truth on what this means. So in the last 10 years, there's a ton of marketing that basically focused on social network, search, kind of third-party network to try to sell your product. It was quite fruitful. Everybody made money, including the networks, the likes of Facebook, Google, you name it. However, with the restrictions and controls being put in those, first-party data is king. So what that really means is that you're really not allowed to reach or connect with somebody unless you know them. You know, and I can see that moving forward more and more. And really, governments are putting, restrictions and tools in place to protect the individual and the data and how that data is being utilized. So you have to get really, really smart about how you manage the data that you are collecting and maximize on that. So the needs for machine learning in understanding your business is key, because you can't just, blanket statement, I'm going to send an email to 1 million people. Those days are done. It's considered spam today. It's all about personalization. And to do that at scale for large businesses, it's a magnitude of complexity. And you will need tools to make that happen. The future is really direct to consumer connections in a lot of businesses in the last 2 to 3 years. And the reason why they're spending money on data is they want to bring it home. So, in the days of, you almost have to look back 7, 8 years ago, everybody's going, well, how many followers do you have? How many fans do you have? Like how many, like your Facebook page or whatever that may be, like 10 years ago. No one's talking about that. Everybody's talking about how are they building their own infrastructure to own their own network, to own their own fan base, and to market directly to them. Because at the end of the day, if Facebook goes down, or Meta, or Google, or any of the other networks that you're trying to reach your audience, you don't care, because you have a direct to consumer market strategy. So certainly email, even though you would think it's been here for decades, it's still the way to go and market. Mobile and SMS in North America is big. For international, maybe WhatsApp and some other regions of network connectivity. But at the end of the day, it's that simplified way of connecting with individuals at scale and providing some personal connections and personal interactions. And that's hard to do when you're dealing with, potentially, 500,000, 1 million fan base and so on, and trying to make sure that you're sending the right information at the right time, at the right moment, so people are not getting inundated with a lot of crap that you might have been in the past.
Okay, thanks, Darshan. So to you, Troy, the same question, but I guess it's different for you because you get to experience many companies going from MVP to scale up. What is that tornado like?
Yeah, well, it's funny because, of course, they're all starting their go-to-market journey, right? A lot of them have built something. They're technology founders. They commit the sort of the original sin of we'll build it, then they will come, which we all know really well. And as they start that go-to-market journey, they're all starting to understand, work on what is our strategy, what's our marketing plan, what's our sales plan, how are we going to do inbound, how are we going to do outbound. And just to key off what Darshan said, it was interesting because, even just to pick outbound just for a second, one of the interesting tests, and I just ran this last week, was to take a whole pile of contact data, right? The B2B data that's out there, that were not first party things. These are just out of a third party database, pull a bunch of data in, enrich it from 30 different or 40 different providers that are all coming through this exchange, and then literally have it pull down all of the LinkedIn posts written by those people and have ChatGPT summarize what are the top 3 careabouts for this person based on the content they wrote on LinkedIn, so that then you can do a mass personalized email or LinkedIn connection request to the person saying, I've been following you, and based on your content, it seems that you care about A, B, and C. We should connect. Things like that. So it's really interesting to see the kind of really crazy rapid innovation that's happening in this space, so that you're pulling in data, you're cleansing it, you're merging it, rationalizing it from a bunch of providers, having ChatGPT read all that data, summarize the data, so you can then do an outreach that's personalized. So crazy things like that are happening.
That's both cool and really creepy. Troy.
Yeah, exactly. It's both. 100%. I think, but bigger pattern, right? I think it's typical of what we saw in cloud, right? Because it was a big enough wave. You get the predictable chaos, the usual noise, a lot of semantic arguments, a lot of people, the taxonomies are not yet defined. The markets and the sub-markets are not yet defined. So you get all that sort of chaos and positioning for, I own this term, no, we own this term, and it means something else. And you get a lot of, technology push. So a lot of founders just all get funded and they all just dump stuff on the market versus customer pull, saying, I need this to solve a business problem. So a lot of the sort of the same patterns we see with every big wave.
Okay. My last questioning before we open into the floor is monetization. So how do people make money with this cool technology? We'll start with how Darshan makes money, and then we'll go to Troy to talk about all the companies he's helped, how they figure out how to monetize.
Sure.
So Darshan first.
Sure. So thinking, you bring back SaaS as a good model. It is a good foundation to address recurring revenue. And what I found, through the time, we've been around for many years, we realized that once they come onto your platform, there's other, opportunities of enriching, automating, let's call it consumption-based data that could be monetized. So even from the direct business itself that's using your platform. So for us, the way we make money is three ways. So we make in combination what we consider SaaS is really the subscription, which is the contract. So the contract gives us an opportunity to address an annual to multi-year contract. The second thing that can get added on to that is what we call usage. And usage is really how the data or the system is tapped. And you can buy bulk consumption usage. Think of it as, I want to be able to send out, 100,000 emails per month. And then so you sign a multi-year and they buy a bulk associated with that. But they can't start without a subscription. So that just gets added on. It's still part of the SaaS. And then, other forms of usage could be enriching the data that you can kind of sell back to your community. Obviously, it has to be anonymized and everything else, but this is your insight. So from our perspective, our platform is specifically focused for music, sports, and entertainment. So it's very, very enriched set of data points. When we anonymize that set, we start to identify predictive models, how someone might behave in particular regions. How people might buy in Toronto is a little bit different than Vancouver. And then similarly, depending on the industry, it might be, again, a little bit different again. And then that gives you some improvements, and then you can potentially sell that back as part of improvements on the data automation piece, which is really, really different in the old days when you just take a look at a SaaS. Oh, I have a subscription, I get X amount of dollars, and then that's it. Where today it's really a layered on approach that increases the overall SaaS. So all of a sudden now, instead of just making a license agreement that someone may use your platform, you're actually having a longevity growth. So most of our clients stay on year over year because the data enrichment and the opportunity of doing that just gets better and better year over year. So to remove that is very complicated. Just to automatically I just have now 1 million emails. Well, no, with Tradable Bits, you actually had 1 million emails understanding who's most likely to buy more expensive products in certain regions, what they're interested in, their affinity. You can't take that with you. And so then it becomes a really sticky point. And then last but not least, I think Jeff identified this, is that not everybody might be skilled enough to leverage the technology. And so, here we got this massive, let's call it a tractor. And someone goes, well, I'm not licensed to understand how to drive a tractor. So we're like, okay, sure, no problem. We can help you drive that for certain pieces. And so that becomes more professional services. And then especially when enterprise, there might be some interesting data points that's unique to them that they want to incorporate as part of the strategy, and that's it. So, but in reality, about 80% of your business in today's world, when you're dealing with data, should be quantifiable as a SaaS. And if you're not doing that, there's there's ways to do that, and you have to change the model so you're not splitting those opportunities. And then probably 20% was always going to be professional service, especially when you're dealing with big data.
Thanks, Darshan. So Troy, is that similar to what you're seeing? Are you seeing a lot of different variations, or maybe there's something really cool you've seen that's really different?
I think the big buckets are 100% consistent with what Darshan's saying, right? You've got basic software, SaaS, right? We all know that pattern. You've got the services, professional services, I'd call it the one-time professional services that go along with that. You've got the managed services you've talked about. And I think you've got the usage of a platform. And I think the usage models are getting really, that's probably where the innovation and the weirdness is coming from. I think, Jeff, you and I talked about this, but I've seen everything from, a company saying, well, we have, per seat or per team pricing because, hey, you can't use this without a team. So we'll just charge you a flat rate for the team. We don't even care how many people are on the team. So that's been an interesting kind of variation on the SaaS model that I saw emerge. I've also seen in the data space, it gets really, really weird because I looked at a lot. I looked at about 100 companies that do labeling, transcription, content moderation, all the way up to synthetic data. And their pricing was all over the map in terms of structure. Some of it was come to us and buy a prepackaged data set. Other ones were, hey, give us 1 billion frames of your video. You're an autonomous vehicle manufacturer. Give us 1 billion or 1 trillion video frames. We will label it at a per frame cost. And so that's, I guess, kind of usage, but it's more piecework. And then there were other ones that would flip it around and go, we'll charge you per hour and we'll get more efficient over time as we label them because we get to know the domain more. So we're incentivized to do higher quality work because then your unit cost drops over time for labeling. And then other companies would come in and say, forget it, that's the old way of doing it. We'll have machines, do calculations. We'll have rule systems and machine learning label all of those trillions of images for you, and we'll only have humans in the loop to sort of like audit it. And so they would have a completely different model. They would probably just charge like on a traditional SaaS. So I've seen things like AWS. I think we were all pretty confused when AWS started charging on compute units and storage units, and people were like, what is this? I'm seeing similar things like, oh, we'll charge you for 1 million decisions per month made by our prediction or decision engine, or we'll charge you for 100,000 contracts reviewed by our OCR system. So I'm seeing a lot of innovation in this space, but I think if you bucket them, they're probably usage, managed services, professional services, and SaaS.
Let's go to questions from the floor. Do we have anyone in the room here that wants to ask a question of the panel? So you'll love this question, Troy. It's understanding about the network effects of ChatGPT. What's going on there?
Well, I mean, you already nailed it, right? It's humans for the first time in history at scale have been able to talk to an AI. So everybody just told their friends. I think it was pretty simple, right? Within 5 days, you had 1 million users, and within whatever, it wasn't long after, it was 10 million. So I think it was just, I don't know that that's a pure network effect. I think that's not according to the definitions. That's just probably virality more than pure network effect. I'm not sure if I answered the question though.
Okay, I'm from the front row. I don't know if you guys heard that question, but it was asking about the trends towards regulation that are creating either opportunities or challenges in different geographies. I'll let you guys think about that.
That's probably Darshan's.
I'll start by my initial answer is that data residency, data governance, regulatory compliance, they're all huge buckets of things that have to go in conjunction with all of this stuff. So you'll hear that some of the companies presenting today even talk to helping to address some of those, and as well security, because if you don't secure the data, you're at risk for all those other regulations that if that data gets escapes. So Darshan, why don't you give your perspective on what you're dealing with all those geographies? Darshan? Okay. Oh, Darshan, can you hear me? Can you talk a little bit about the regulations that are impacting adoption of your technology in different geographies?
I think we lost his audio.
You hear me now?
Yes.
Okay. Meanwhile, is there any other questions online? Any questions in the room?
Right. So one of the things that has really been highlighted with ChatGPT is that it can write really clever answers to questions, but they're often incorrect, which sort of brings to mind the data that is feeding AI and ML programs and generative programs like this. We need certain strategy for ensuring the quality of what is being put in, because if you're putting noise into the system, you're going to get noise back. So what are your strategies for ensuring data quality when you're setting up any of these AI or ML systems?
I mean, I can answer that a little bit on our side. So first of all, when you take a look at, everybody's obviously very excited about ChatGPT and everything else, but at the end of the day, you're absolutely right. You don't know what the basis of how that was trained, right? But the main thing here is that the concept of machine learning has been around since 1970s, I think. But in reality, how it's evolved in the processing engine creates unique opportunities. So for us, we don't go and use ChatGPT or anything like that, or any AI or machine learning tech. We built our own, right? Because a lot of it, you have to be smart about how you feed your own system and make some projections on that. So the question is that, if anybody's doing machine learning, they're not taking a public source of context. They're building their own. They might use the mechanics of the engine, but at the end of the day, the baseline of how it starts, it comes from a whole bunch of data points that they believe produces the best outcome for that particular need or that business. And today, I think what makes it very interesting in regards to machine learning is you could do that at scale. So 10 years ago, you had to literally build a lot of boxes and things to make stuff work. Today, you can spin off an entity, whether you want to use Google, AWS, Microsoft now in combination with certain things, or you can use open source as a starting point. I think the most interesting question you asked there was that how do you then feed and decide what information is important and how the outcome is, and that's important. And I think that's just the starting point of everything that we're learning today, and even including our own self biases. So I'll give you an example. This is pretty simple. Talking to one client, they've decided that, hey, if someone buys something for $750, they're more important than somebody who buys something for $50. And I'm like, well, okay, but is that true? And so when you start looking at machine learning, you start to define, what, from our perspective, value of the fan and the interactions. There's a weighting structure you can start changing along the way. And if you make a decision on your own bias at the very beginning, prior to actually determining what is true, then you've kind of self-determined the outcome. And so when we're dealing with big data, then the first intention is asking the right questions about what's important and what data points that you feed into it. So it's absolutely clear. And then deciding the outcome with different scenarios, and then testing it out in the marketplace, and then seeing how that actually responds to the right thing that you think you made the assumption on. So it's a bit different in the scenario where in the old ways, you kind of decide what you think is true, you produce it, and you're like, it's done. In today's world, you start to decide what is important as a starting point, and then you want some insights. Really, the outcome that comes out of that is the intelligence. As humans, you can kind of make better decisions than AI for sure. And then deciding to teach the machine what is correct, what is not correct, according to the outcome that you want. And so there's a lot of iterative process to do that. And then once you figure out certain components, then you kind of let it expand. So I don't know if it answered the entire question, but it's true, yes, you need to feed it the right information. You have to decide what is right information. And then, everybody's building their own machine components today, which is not just a general purpose source.
Is there any other questions or at the back there?
Hi, Tony. Hi, Darshan. Fabulous conversation. This is Ajay from Descender Capital. When we look at investing in companies, we're looking at companies with some moats around their data. Our belief today is that the transformers and the models would kind of collide together, right? You're going to have a 96% efficiency coming from one and a 96.8 coming from the other. But what would truly differentiate is the data set that you have access to, specifically your proprietary data set. I'd love to hear a little bit from Darshan in terms of what you're doing in terms of generating. I think you have the leverage where you can generate a data set with the transactional data that you probably have privy to. And love to hear from Tony about what you're seeing in terms of the market, like how are you able to sell into the market, your ability to have this private data available to you.
Okay.
So for us thank you for the question. So the data source and automation, the most interesting part at scale now, and we focused on a very niche market, right? So data, I mean, you can apply it to a billion different things, but we focused on, we're not curing cancer here. Like literally for us, we are interested in entertainment and exciting things, artists, concerts, sports and so on. But there's some really interesting metrics when you start building that in, because whether someone is going to see a concert, going to a music festival, or going to watch, a hockey game or a basketball game, it's that moment in time that's alive. And there's some compelling things about human beings, about how we behave and how, our consumption of content is really a marketable opportunity. So the fact that we stuck with the niche market, it does provide some really high throughput intelligence that makes it a lot more interesting for a marketing strategy to build a new product specifically, to market to a certain segment of people. And then there's some cross-pollination, because at this point we're not overlapping, industries. We're overlapping a fan base that typically is interested in entertainment. That gives the businesses that are on Tradable Bits some flexibilities of insights that they couldn't foresee just by doing it on themselves. So, case in point. So, for example, if you just had 1 million email and phone numbers, and you can see, and you're based in Vancouver, can you expand on building out and trying to get people in Alberta to come see your product or whatever that may be? Out of that 1 million, you wouldn't know who's willing to travel or who's willing to spend more money to do that, because you only have one segment of interest on buying behavior. For us, we start to identify the connections that could happen where someone is willing to travel to see an entertainment, and maybe even determine, without even asking that individual whether they have expendable cash, the fact that their buying behavior shows they have expendable cash treats them in a particular category of interest for a given business. So in the end, when we take a look at multiple data points, we still first have to decide within the business what's important. And the fact that we're sticking with a niche industry, it gives us that opportunity to ask similar questions along the way. So from that perspective, the data that comes in, we start to identify affinity and modeling that answer some questions from a business perspective about understanding their fan base. So that's in a nutshell what, when you take a look at when you de-anonymize set of data points and then allowing you to enrich your own data collection and interactions, then those are the things that could potentially provide some outcome. And then obviously those models you can test out and see what the success rate is. And so if we surface and say these 1,000 people are willing to travel,
So,
and then you do that and you see an 80% success, then you know that modeling works.
thanks, Darshan. Now I have to put Troy on the spot. What's the secret to selling AI in 2 minutes or less?
It depends. Who am I selling it to?
Well, you're essentially selling magic, right? So how do you sell magic?
Go back to the basics. What business problem are you trying to solve? Honestly, it's like every other piece of technology we've ever sold. You've been selling it. Everybody, a lot of the folks in this room have been selling it for decades. What's your business problem? Does this thing help you achieve it better, faster, cheaper than any other tool you have in the toolbox? Then let's use this tool. That's my less than 2-minute answer. Take away the magic and
Okay.
just get down to the
So,
nuts and bolts of what it does.
So to wrap up, before we thank you two, what's your 1 or 2 tips to investors at looking at companies in this space?
Darshan?
So
I'll throw you under the bus.
Yeah, thanks, man. I don't know if I'm the right guy to ask that question because I've never taken any money from anybody. But
Be like Darshan.
So I think the right answer is and it goes back to what Troy indicated. Does the solution solve a problem for the business? Period. So, in my explanation there, we're talking about, who's willing to travel, high throughput person with big money and all that. That's a problem. So, when someone's doing a music festival and they want to sell a premium ticket for $2,000, you can't sell that on Facebook or Twitter. And then someone, I'm going to go and spend $2,000, fly somewhere out of pocket, could be 5-7 grand by the time you're done. How do you find those people? Right? That's a good question. So a business is trying to figure out how to find those individuals. And so if machine learning or AI can help solve that and surface it, that premium buyer, or potential opportunity for that buyer to be surfaced, whether someone goes and calls them and does the outbound call for a season ticket holder or whatever that may be, it's huge money. And so that's what's going to excite the business. So if you're going to invest anywhere, I think you have to make sure that the business that you're investing in totally understands how can they make the company make more money, save money, or optimize the way they're doing it so they can make, improve their overall serviceability within their business.
Okay, Troy, you got the last word.
Okay. I think trust your gut and the decisions you've been making all the way along. Think of it as a black box. It's just a set of technologies. It's just a technical solution to a particular problem. So at the end of the day, start with the basics. Is this a business problem that needs to be solved? And is there a market for solving it? And what are the current solutions out there? And now can you find this team with this new black box that can both build that better mousetrap and market it and actually access that market? It's always the fundamentals. Don't get hung up on the AI. I was on a call yesterday and a founder came and said, I have a problem and I can solve it for this market and it's going to have AI in it. And by the end of the call, I had convinced him there was really no AI in there at all. So don't get hung up on the technology. Just focus on your due diligence that you've always been doing.
Okay. I'd like to thank the panel. I would like everyone to give them a hand and they can hopefully hear you.
Thanks, Jeff.
Okay, excellent. Thank you
Thanks.
so much, Darshan and Troy. And thank you so much, Jeff, for organizing this panel. Now we have just about a few minutes for everybody to refresh their beverages. So let's reconvene at 4 o'clock sharp and we'll start the VANTEC meeting. Thank you.
Bye.
Bye-bye.
All right, everybody, please take your seats. We're going to get started. We've got a lot of exciting companies for you to view today. Okay, everybody, welcome to the VANTEC Angel Network meeting. We had a very insightful and interesting talk on big data hosted by Geoffrey Hansen. And now we're going to get right into the company pitches, which are also operating in the big data space. I'm Felza Ali. I'm your host for this afternoon and aided by our founder, Mike Volker, which is absolutely amazing. All right. So let's go through a few house rules here. We have been operating for 23 years. We are a group of angel investors who support and invest in high growth ventures with capital, not just capital, but connections and advice. And we've had more than 180 members. We are one of the largest angel groups, not just in BC, but also in all of Canada. And more than 3,000 companies have presented, and a good number of them have received funding. So we're all here together as a community to grow the BC angel investor community and support our members to make more and better investments in BC-based high growth ventures. And we like to thank the Government of Canada and two professional angel organizations, the Canadian-based National Angel Capital Organization, NACO, and the American-based ACA Angel Capital Association. So here's some stats. Speaking of data, we're all data geeks by heart. In 2022, with the year that just ended, so we haven't collected all the data yet, but we've funded 93 companies with over $10 million. And notice that the number has been growing year by year. Next. We also have the benefit of many funds as well as individual angel investors. We have a couple of funds that are very closely aligned and associated with VANTEC. One is eFund and one is WIDF. You'll hear more about that in a little while. Of course, the members of VANTEC, 67 companies, $8.6 million. Not bad. To become a member, there's a full membership and as well as an online member. And if you are a member of any of our partner groups, after all, we are a community, we get a further discount of the same full member benefits at only $400 for 12 months. We'd like to thank our network sponsors. Some of them have been with us from the very beginning since 1999. I'd like to give a shout out to Fasken, Tandem, Western Pacific Trust Company, and I see the president, Allison, in the audience. Raymond James, OKR Financial, Go Recruitment, Invest Ventures, and of course, our venue sponsor, SFU Venture Labs, which we are grateful that they're letting us use their space. We have a number of community partners. So besides our associated funds, WIDF and eFund, we also like to give a shout out to Keiretsu Forum Northwest and Rockies, Tandem Innovation, Volition, Go Recruitment, Spring Activator, Rocket Builders, and our two professional organizations, ACA and NACO. So our agenda for the rest of the afternoon, we're going to start off with some community announcements. We like to use VANTEC as a platform for people in our community to talk about what they're doing. And then we'll go right into company presentations. We will start off with 90-second pitches, some of them brand new previews and some of them returning for another round as updates. And then we will break for social and networking, both online and in person. Yeah. Okay, after we do presentations, it doesn't stop there. There will be some company follow-ups. So please, everybody, make sure you do talk to the companies, whether online or in person. We will be reconfiguring the room so that the companies will have tables at which they can receive you to do a little bit more in-depth conversations. All right, so we're going to go into the community announcements, and I believe we have someone from Protein Industries Canada. All right.
Hi, just a very quick one. Jennifer Januska, Director of Intellectual Property for Protein Industries Canada. Those of you who don't know us, we're one of Canada's innovation superclusters, and we are focused on plant-based food and plant-based protein products. And we are a funding program through the ISED and are looking currently for AI projects in the plant-based protein space, and the projects that are eligible for funding through a co-investment model are must come as a consortium of 2 or more members. There are various rules about it, but if you are looking for more information, and this space is where you are, please do reach out. I will leave my contact information, and I will be available in the networking. Thank you.
Thank you very much. I'd like to call up Dave Thomas from SFU Venture Labs to say a few words.
Super. Thank you very much, Thalzel. Quick question. How many of you are with a company or an investor in a company that needs to do some IP work right now? Either think about it, file a patent, or do something in the future. Is that anybody here? All right. So I just wanted to tell you briefly about 2 programs that are operating. One is through Venture Labs. It's funded by IRAP. It's called IP Assist, and companies can come in and get 3 to 6 hours of free legal advice with a quality law firm. So Gowlings, Oyen Wiggs, McMillan are all participants. There will be a much larger national program introduced in later this quarter, and we hope to be back either at the February meeting. This is the February meeting, a March meeting or the April meeting with more details for a bigger, larger, really effective program. Also, thank you.
Thanks a lot, Dave. So that was programs from SFU Venture Labs, also our venue sponsor. I'd like to call upon our community manager, Roger Killen.
Hello, I'm Roger Killen. I'm the community manager for VANTEC. Well, what does that mean? That means my job is to ensure that our members have an enriching and memorable experience as humanly possible. Now, VANTEC has 2 missions. The second of the 2 is to support the growth of the angel community in British Columbia. You can imagine what COVID did to that objective. But we're now bursting out of the blocks again and have created a campaign called, very creatively, Growing the VANTEC Community in 2023. To that end, I want to reach out to all our members and ask you, in the next 9 meetings in 2023, please bring an angel investor guest. You can do so for free. And what your guest receives is access to that meeting's deal flow, which is generally around about 15 companies. They've all been vetted. And of course, there's delicious networking to follow. That's my real message, simply to ask you to use each of our next 9 meetings to bring a guest and help us achieve our growth objective to boost the angel investor community in British Columbia. Thank you.
Thank you. That's very inspiring, Roger. There we go. The challenge has been offered. All right. Okay, so we were talking about two associated funds with VANTEC. The first fund that we'll talk about is the E-Fund. And this is right off our website, e-fund.ca. You can see the URL on the screen. This is our investment activity since we were founded a little over 10 years ago. Over 1,000 deals screened, about 100 of them had follow-up meetings. And half of them were worthy enough for due diligence efforts by our own e-funders. We made 78 investments in 42 companies. We've got 5 positive exits to date. We are accepting investments. We're into our fund number 6. We are RSP eligible, TFSA eligible. We qualify for the VCC tax credits. Now I'm going to hand it over to my colleague, Mike Volker, to talk about Woodif. Oh, by the way, I'm an investor in Woodif. Mike's an investor in E-Fund.
Thank you, Thelzel. Thanks to all of you also for joining us this afternoon. So I want to tell you a little bit about the What If Fund. Can you just did I miss one? Did we go too fast? Oh, yeah, okay, that's the beginning. Okay, that's good. Yeah, so as you can see here, we've got about a 20-year track record. We started in 2003, and we've been making investments ever since then. We've invested in over 130, actually 138 companies to date, and a lot of those are still active. And we've had 50 exits, of which we've had 20 positive exits. The returns to you as investors have been pretty good, anywhere from 7 to, it's really jumping over, isn't it? It just shows how animated we are. Anyway, I'm trying to remember what's on these slides as they go by so quickly. So we've had a good track record. Investors, all our investors have made money. A big difference between What If and E-Fund is that What If is an evergreen fund. So when you invest in all of these companies that you can see bouncing around in the portfolio. There's over 75 active companies. And what's good about that is that we have ongoing liquidity events. So every year we can count on some exits. And our shares, originally started at $10 a share that we're now up to $27. Another salient feature of the fund is that you can do multiple rollovers. So many of our early investors have gotten all their money back just through tax credits, because whenever you have an opportunity to cash in, you can leave your money in and get the 30% on the amount that you've left in again. So what that means is for those who've done 2 or 3 rollovers, they basically got all their money back and they still have shares that are worth $27. So anyway, long story short, we'd like to invite you to take a closer look at the fund. Please talk to me afterwards if you want more information. We are open for new investors right now, hence the invitation to you to join the party. Shares are being sold presently at $27 until the end of February. And of course, you get the 30% refundable tax credit, which you get as soon as you file your 2022 tax return in April or May. So thank you for listening, and happy to answer any questions for you later on.
Thanks, Mike. We'll have you back up here pretty soon. All right, next up, I think our other announcements. All right, Jackson, did you want to say a few words about the Startup Visa program?
Yeah, hello. So the VANTEC SUV program is growing, and we're looking for some administrative help, mainly just to do a lot of the background stuff. If anyone's interested, send an email to suv@vantec.ca. Once again, that's suv@vantec.ca. Thank you.
Okay, now he's going back to work. That's how busy he is. Those are Jackson's fans. These are people who participate in the Startup Visa program. All right, next. There are a number of announcements and about events that are happening in our community. You can see them here on the screen, but if you forget, just go to vantec.ca and scroll to today's agenda. You'll see these all advertised. All right, a few house rules. If you're an online presenter, mute yourself when you're not presenting. Make sure that your phone and anything else that beeps or vibrates is off so that we could just hear you and concentrate on you. And network, make new connections. No soliciting if you're not a presenter. Please identify yourself online as a company, investor, or community partner. If you're an in-person, there is a square here on the floor. Please make sure that you stand within it so that you could be seen on screen, because we will be sharing this recording with all the registrants after the meeting. Keep the microphone close for a good audio, and you can use the remote, but Jackson responds to voice activation. Next. Tips for entrepreneurs. Basically, all of these points is network, network, network. Whether you're online or in person, please do network. VANTEC is tries to be very active in the community, liaises with other angel groups in the community, including the Pacific Northwest Angels. Once a month, I promote our VANTEC companies to angel investors from Oregon, Idaho, and Washington, and occasionally Alaska. So you do get quite a lot of coverage, all of you presenters. Make sure that your information is up to date, because that's how we trade information between us. If you are trying to join us by internet, here's the information. If it flashes by too quickly, you can come and ask Jackson. Next. All right, and there's a number of ways that you can contact us: email, LinkedIn, Twitter, Facebook, and of course, all the information that we're talking about here is on our website, vantec.ca. And with that, I am going to call up Mike Volker, who is the founder of VANTEC, and he's going to introduce all the 90-second pitches.
Okay, thanks, Thelzel. This is the fun part. This is where we hear the pitches, and frankly, and speaking personally, I like the short pitches because they're entertaining and just enough to get your interest going, and usually not enough time for them to shoot themselves in the foot. So here we go. We've got 2 previews today and 4 updates. So first up is Geco Engineering, and we'll give you 90 seconds, and then we've got Sensor Globe following that. And I think there's a clock there you can keep an eye on.
Okay, thank you. Hey, I'm Greg Stewart, CEO and founder of Geco Engineering. Next. So currently, farms detect herbicide-resistant weeds only once they've spread throughout the field, right? Resistance can cost a farm $500,000 per year and is driving increasing chemical usage. At Geco Engineering, we find resistance early and we nip it in the bud. Next. Right? If the same herbicide is applied too many times, resistance can develop. Next. It starts with a single plant that is resistant to the herbicide. It drops its seeds, it becomes a small patch, and then over time, this grows to become dominate the field. Next. This can cost a farm more than $500,000 per year, and an agrochemical company can lose a product that costs them $1 billion in a decade to make. Next, please. With the recent advent of optical spot spraying devices, whether tractor-based or drone-based, farms can save 80% of the chemicals used for weed control while generating a map of the location of every weed in that field. Now, this is what creates an opportunity. Next, please. So Geco, our company, has developed a patented technique to process this data and alert the farm about emerging herbicide resistance so that they can manage the problem before it spreads and becomes a serious issue. This avoids the need to add a new and expensive herbicide to the weed strategy. Next, please. Geco is currently developing our B2B customers in each of our target market segments. Next. And in our first year of operation, we secured 3 partners and are expanding to 7 for 2023. And then finally, Geco is interested in funding opportunities, introductions to new players in the crop protection ecosystem, and advisors with experience in B2B customer development and exits. Thank you very much.
Thank you. And next we have Sensor Globe.
Thank you. Hey, my name's Alexander Stabino. I'm co-founder of Sensor Globe Technologies. We focus on mitigating waste and increasing profit along the seafood supply chain. So what I'm here to talk to you today is actually about salmon. So why salmon? It's a low carbon protein and demand is quickly outpacing supply. So we focus on mitigating loss on transfer and treatment processes along the supply chain. We believe this to be about a $2.5 billion annual problem for salmon farmers globally. How do we do it? We have compact sensor technologies that do full spectrum water quality, as well as pick up anomalies through our G-Force module. This all feeds into a modern software platform that allows them to give them real-time insights on how to mitigate loss and increase production in real time. What makes us unique is that we're low cost and can be placed along any point in the supply chain to increase revenues. So you can see a quote here that no matter what kind of production, whether it's on processing early on in the process, one of our biggest clients, Movi, has seen a reduction in 40% mortality in any given process. Now, this is important because our clients receive a quick ROI on using our product, sometimes after the first use. So where are we now? We have 2 patents in our operating markets. We're currently doing 55,000 annual recurring revenue, and we're working with some of the biggest companies in the industry. We're looking for 500,000 from angel investors, which will allow us to raise additional capital from experienced investors and also get to cash flow positive by 2025. Thank you.
Okay, thank you. And now we've got 4 updates of companies that have presented previously and have raised capital from angel investors. First, we have ThisFish. And by the way, What If is an investor in ThisFish. For that matter, What If is an investor for 3 of the updates. Totally coincidental. Okay.
Great. Thanks. Great. So thanks. I'm Eric Enotam, co-founder and CEO of ThisFish. So our mission is really to help drive profitability and sustainability in the seafood industry through better data, basically digital, real-time, and actionable. And we do this by providing software and artificial intelligence to the seafood industry. And just wait a second, I have a slide. Is our slides going to come up? And we do this by, we've developed a software called Tally that basically allows seafood processors to digitize all the production, quality control data in real time on the factory floor using IoT devices and tablet computers. I have a graph that's going to come up here shortly, I think. Anyway, hopefully it'll come up. Anyway, I called the graph, oh, there we go. There's our software. Yep, no, forward. Yeah, right there. Yeah, so our software is called Tally, and it's effectively a smart manufacturing software platform for the seafood industry, incorporating many different types of technology, IoT, advanced analytics, QR codes, temperature sensor. Next slide. And the thing that's going to be driving tech adoption in the seafood industry, I call this the fish and chips index. So since 1990, the absolute price of fish has gone up 81%. Meanwhile, the price of semiconductors or computer chips have gone down by 50% while becoming exponentially more powerful. So this is kind of the underlying meta trend that's really kind of driving technology adoption. And yes, computer chips got more expensive during the pandemic, but you can see there, seafood got ridiculously more expensive during the pandemic. Next slide. So we are launching at the Seafood Expo North America in March, our first computer vision product called Tally Vision. Effectively, we're putting a camera above a conveyor belt in a seafood processing plant, and then classifying all the fillets according to 6 different types of defects. Next slide. Then we spew all this data back onto our advanced analytics platform called Tally BI, and give processors extremely granular quality control data, which they can also feed back to the aquaculture companies to better understand what practices on the farm are leading to quality differences in the factory. Next. We're also working on a computer vision project for the global tuna industry to do rapid salt analysis. And we just got a $500,000 grant from Ocean Supercluster and some other non-dilutive grants. So we'll be looking for a top up from our investors such as Mike. Thank you.
Okay, thanks, Eric. Gave you a few extra seconds there because of the technical glitches. Techbrew Robotics. Who's here from Techbrew Robotics? Or is that an online one? Is that Michael Burr online somewhere? Or
Hi, Mike Snowden here.
Okay, great. You ready to go?
Absolutely. Thank you very much for having me. I apologize. I couldn't join you in person today. I'm 5 hours northeast in Salmon Arm, British Columbia, and bumped into Frank last week at the Pacific Agriculture Show. So really appreciate Frank giving me the opportunity to update the crew on developments here at Techbrew. So very excited to report that along with our board, we are just reviewing a term sheet from our previous lead investor, which is Emertech. And as well, we have BDC involved in this most recent Series A raise. It's going to be in the area of about $10 million. And the best news of all is that we still have a little room left for some individual investors as well. So as we round out that latest fundraise, I will drop my email in the chat if you're interested in learning more about the BDC and Emertech terms. We're happy to answer any questions you have, and please excuse I don't have any updated slides or anything like that, but do again appreciate the opportunity to update the crew, and available by email or telephone with to answer any questions anybody has. So thanks again for making the time for me.
Okay, great. Thank you. Care to Talk is up next. Is that also an online one? Okay. Is that Jordan? Jordan, are you with us today? Again, this one is also What If, and I think eFund is also an investor in this. I think we put 200 into Techbrew and certainly more than 100 into Care to Talk. So Jordan, take it away if you're ready.
Yeah, thanks so much for having me, and thanks for VANTEC, WUDF, and eFund for believing in me. My name is Jordan Shelley, founder of Care to Talk. Our solution is quite simple. We provide healthcare and connectivity to seniors. We have a simplified tablet for seniors, and it's an app based for family members to connect to their parents. The simple use case for us is the primary family member could be in the journey of seniors' health, so they could make doctor's appointments, talk to our medical liaison, and remove that kind of gap in when connecting to healthcare. Our current sales is at 15.5 MRR. We're actually forecasted to do at 31,000 actually in mid-February. So kind of double our MRR just because we have some nurse practitioners joining us, and we have tons of deals in the pipeline. Our pricing is quite simple. It's $45 per senior or per tablet. It's free for the family members. And then as we recruit doctors that are semi-retired or retired, we give them we take a 10% of the kind of OHIP or MSP fees. Global reach, we focus in Canada, but yet you can see the family members kind of across the globe. At least a recent one was an Italian parent booked it for their mom in Victoria. So it was kind of cool to see that healthcare engagement across the globe. We're currently closing our roundup. We have about 25,000 remaining. And so we're set to close kind of February 7th at a 7 million pre-money common. And our goal is to get to 1 million ARR by the end of the year. And yeah, thanks so much for everybody and supporters in us so far. Thank you.
Hey, thanks, Jordan. Gee, maybe we should do that 25K unless somebody else in the room wants to grab it.
I would love that.
There you go. Okay, thanks.
Okay, thank
you. The final of the last presentation on the updates is OneCup AI.
Hi, My name is Geoffrey. I'm from OneCup AI, and we do computer vision for animal care. We're the eyes of the rancher when the rancher is away. And for the last 3 years, we spent about 3 million building what is arguably the world's most advanced AI for monitoring animals. The problem that we address is simply this, is there's just not enough people to go around at the ranch. And there's a real consequence of it. Today in Canada, there's a shortage of at least 60,000 people, at least. In the United States, this lack of human beings has a lot of consequences. One is premature deaths in animal calving. They lose about 2.5 million animals and calves a year alone. And premature deaths in cattle is about 4 billion in the United States. We think we can address this problem using computer vision and many, many others. Because computer vision, well, it's a lot like software these days. Our AI looks a lot like this. It's a multimodal, multifunction AI that runs at incredible speeds. We see a series of boxes and dots used to classify animals. And this pipeline that you're looking at here can see over 25 different things about animals, from phenotypes to lameness, to estrus, to calving events, to activity. We are running this pipeline here right now today. Yesterday, we ran this on 6.4 million images of animals, 6.4. We are deploying this across the country as we speak. And as of right now, we are at over 100 locations. And we've collected not 400,000 hours of footage, but now over 500,000, consisting of over a petabyte of video data, making us one of the largest collections in the world of animal information on a video side. What our customers finally see is something like this. If I may show you, is that our AI generates this information that can be displayed in real time, shared online, and used to generate massive amount of analytics. We deploy this technology today for about $40 per camera per month. And we have in our backlog well over 300 to 400 ranches that have expressed interest in buying this, including ranches all over the world, from South Africa to Europe to India. Unfortunately, we just wrapped up our seed round. I'm sorry, but we are doing a seed plus round for institutional investors. To date, we already have 2 VCs involved in the company. And we recently announced, as of this morning, that we made the final 15 of 900 applicants in the Thrive 2 Canadian Accelerator. And that came out as of this morning. Thank you. My name is Jeff. I'm the CTO of OneCup. I head up a team here of 25 engineers in Vancouver to build the world's leading AI for computer animal care.
Thank you, Jeff. We'll have to move along now and I'm going to just have Matthias say a few words about the voting process on the previews, although we've only had 2. I don't know how, it's all kind of all the 90-second ones. Oh, okay, great. Here we go.
Use this.
Okay, sure.
Hello, everyone. So we're going to do a voting on the 9-second pitches. So just grab your phone, point at the QR code on the screen, and do the voting. Yeah, thank you.
Okay, and back to Thelzel, who's going to take us through the full presentations this afternoon.
Great. Okay, so while you're thinking about that, I'll just tell you about how the full presentations work. We have 5 of them today. They'll give 5-minute presentations, followed by 5-minute Q&A. And of course, if you haven't asked all the questions you want to ask, there will be time to do that during the networking session, because the room will be reconfigured so that they will stand at the tables to receive your questions. So each full presentation has an angel sponsor that tells how great their company is, and they're going to try to convince us in 30 seconds or less why we should pay special attention. And the first angel sponsor that's going to do that is going to talk about Aterio. Keith Cerny, are you on the line to promote Aterio?
Yeah. Good afternoon. My name is Keith Cerny. I am a partner at Fresh Founders, and today I'm excited to introduce you to Sergio Toro and his new venture Aterio.io. I'm investing in Sergio as he understands how to build value and how to sell, especially to large enterprises. He's humble but obsessed, and he can take advice and frankly get shit done. There's a huge opportunity for untapped data in the real estate investment market, and Ontario is building something unique. Sergio and I were both at Galvanize together, where a team of us built a Canadian tech unicorn with a successful exit in 2021. He has the support of a number of former Galvanize leaders. Hope you enjoy his presentation and look forward to your valuable feedback and advice. Thank you.
So my name is Sergio Toro. As Kit said, I used to work at Galvanize. That company was sold for $1.3 billion. I had stock options like many others. So I invested in eFund. And the rest, I wanted to buy a real estate asset. And the question is, where do I invest so I can get the best return of my investment? Choosing the correct city, choosing the correct place will have a significant effect on how much value can I get from my investment. So I began to talk to my realtor and say, how do you make decisions? Where can I find a tool that will help me? Because I have $100,000 that I can make additionally on my investment if I choose the best place to invest. And he gives me guidance, but he doesn't give me the answer that I'm looking for. So I begin to talk to developers. I begin to talk to city council members. I begin to talk to people that are actually professional investors. One of them is actually an investor at Ontario. And as I'm gathering that information, I'm not getting the answers that I'm looking for, which is where is the best place to invest. I find out that there is a company called Canalys. Now, Canalys, what they do is they aggregate data on publicly traded companies, and that make them available to investors. That company was sold for $400 million. There's a second company that aggregates data on credit card transactions and makes them available to investors. That company was bought by Bloomberg. And that's where I said, instead of buying a real estate asset, what I'm going to do is I'm going to build a company that will help people buy real estate assets as investments. And that's where Ontario was born. We aggregate data on differences between supply and demand, and we make them available to investors for them to make better decisions. And what it does is it basically takes a significant number of information, throws it up into a data lake, and then we generate insights and we make them into a proprietary data set, which is one of the things that we were mentioning today. I'll talk about that in a second. But as we generate that proprietary data set, it goes back to our data lake, and then we make it available in 3 different ways. One is to investors, realtors, and cities. When you're talking to city council members, it's incredible the things that they do without any information. We make it available via API calls. So you remember that conversation about consumption pricing? API calls, that's where it goes in. And finally, and this is the one that excites me the most, is via the data exchanges by AWS, Snowflake, and Google. If you ever dealt with procurement cycles and negotiation of terms and services with a company, this takes care of all of that. And this makes us available to 10,000 data scientists throughout their platforms, in different platforms. So going into specific markets, we talked to, there's 54,000 real estate developers. The big ones, about 1,000, they have their data analytics departments. The rest, they don't, and they're in big trouble right now. Cities, I'm not talking about Seattle or LA or Vancouver. They have their data analytics departments, but there's 3,000 cities that do not have anything, and they have more than 50,000 people into their inhabitants. And we make them available via a simple subscription that they can pay on a monthly basis to access information that they never had before. And there's 1 million real estate investors that have 3 or more assets into their portfolio in the US. So the way that we do it is we analyze different use cases and we begin to build slowly. And as we begin to build slowly into those different use cases, we begin to open additional available markets where we can sell. And then that gives us a revenue. And as we said, revenue comes in professional services, subscriptions, consumptions, and they go throughout different time cycles of where it goes. There is data out there. By all means, there's data out there. But the message that I would leave is in the data landscape, all these companies were actually bought by that company. It's a sector where buyouts are beginning to appear more and more, and the hunt for proprietary data sets and going into models as a service, it's something that is happening very, very aggressively right now. So Fasken is our lawyer. We have a really clean cap table. We're applying to be EBC eligible. We are looking for the last part of the raising fund, and I'm done in 10 seconds. I used to work at Galvanize. This guy was the employee number 20 of an IPO company. Riley Best has sold 2 companies, including a real estate company, and then Keith Cerny, you heard about him. So I'm looking forward to getting feedback from all of you guys. Thank you very much.
Thank you very much. Don't go away. We've got questions from the audience, I'm sure. Thank you. This for Aterio. Any questions? Yes, in the back? No? Do we have any questions online? Okay, Aterio, I have a question for you. How are you building your sales funnel?
My sales funnel?
Yes.
So we do a couple of things. One is we already began to map out 132 publicly traded real estate investment funds. We're already beginning to map out the 54,000 housing developers. And as we begin to map out, we begin to get engagements in terms of conversations with them. As we have a conversation with them, then we make the data set available to them to begin to do trials. And we begin to generate that pipeline that we begin to make. We are in pre-revenue right now, so we don't have any sales, but it is a work in progress as we identify those. And for cities, which is a third use case, I'll talk about that later on.
Okay. We have a question here. Yes.
What stage is the product currently in? Are you running any POCs with any customers or prospects?
Okay, to repeat for people online, what stage is your product in?
So we began to put data into our data lake back in 2021 when the prices of real estate were still going up. We were able to capture, and we capture 1.6 million data points every week, and we take pictures of that. As the prices began to go down, as interest rates began to go up, then we began to see the downward trend. So we were able to catch the upwards of the cycle, and now we're beginning to get the downwards of the cycle. We have that information, and we're beginning to run analysis in terms of the factors that have influence over the prices of real estate assets based on that historic information. And a simple insight that I will give you is what people do is different than what people say. So usually what you will see is that people will say, I want to go into an affordable market where there's no traffic. What people actually do is they come to Vancouver. And so the different factors that influence the migration of people into a city, which determines the demand of that city, has additional factors that we may have not identified, and that is the work that we're currently doing.
Okay, we have a question online.
How do you aggregate the data?
How do we aggregate the data? Yeah. We have a couple of data analysts that goes in, take data sets from publicly available sources, or we actually pay for some paid sources that are restricted, and then we put them all into our data lake, and then we have a data architect that puts up the pipeline to be able to orchestrate everything, and then we have a person that is a data scientist that begins to run those regression analysis to understand the impacts of that.
Okay, I think we had a question from the audience. Yes.
I'm correct, you don't have any right now, can't give us the actual. Do you have a prediction of what the rate of return on a user, like from a user on your platform, they use it versus didn't use it?
Okay, to repeat.
No, I don't have that.
Yeah, if you could repeat the question for the benefit of the people online.
So can we give a rate of return for a user that has actually used the tool? And the answer is no, we are not at this stage yet. I don't want to give numbers without the data
You don't want
that
to
backs that up.
predict. You don't have a clear crystal ball. Is that what you're saying?
This is a work in progress. So this is not as easy as just putting. So Zillow just lost $1.2 billion trying to get the real price of an asset for them to be able to predict it. There was a report in Bloomberg 2 days ago that they were talking about Redfin and Open Door and how they were losing money because they were trying to do predictive analysis of the price of a specific asset. And then normal users would go in and be able to buy that asset at a loss from them. So being able to do a specific analysis or on a single asset, that is one thing that has not been done. What we're doing is not putting a specific price of an asset. What we're doing is determining what is the specific demand that there's going to be on a specific market, and then give you an investment score on that specific market. And as we give you that specific score, then that gives you additional information for you to make a good decision.
Okay, thank you very much. That's all the time that we have for questions now, but Sergio will be around during networking, so you can have a chance to pepper him with more questions. All right. We have our next full presentation. I'd like to call up Ralph Badur to introduce Orgmatch. Ralph?
Hi, thanks. I'm a VANTEC member, but I'm sorry I can't come today. I'm also managing director of Bad House Ventures, a micro VC firm here in Vancouver, focusing on beta stage product software products. And I'm introducing Trevor from Orgmatch this afternoon. And I met this company at Founders Boost last fall. It's an 8-week program where I was the co-mentor. We started with 25 companies, ended up with 6. Don't tell the others, but Orgmatch was my favorite one. I think it's the most promising. I also appreciated my interactions with Trevor. I saw him take feedback and run with it within those 8 weeks, and the product is maturing very quickly. Another reason I'm excited is that this is a data plate. So on today's theme, they've accumulated data on 2 million foundations and charitable organizations spanning 12 countries. And for each of these, there are at least 100 data points. I'll let Trevor continue on because I don't want to ruin the show. Trevor, sorry I couldn't be there today to see you pitch live.
Thank you, Ralph. Well, Ralph said he might make me blush before this, and mission accomplished. My name is Trevor Loke. I'm the co-founder and CEO of Orgmatch. I founded my first nonprofit when I was 19 years old in 2008. Today, we're introducing Orgmatch. We match funders and nonprofits. This year, there's more funding available to the sector than at any previous point in history. 2 reasons. Last year, the government of Canada introduced in the budget a regulatory change that is forcing every foundation in the country with more than $1 million to give away 5% of their assets every single year. That's $200 million in new deal flow capital. In addition, corporate social responsibility, you've heard of it, 13% year-over-year growth. So what's the problem? It's slow, expensive, and inequitable on both sides of the marketplace. You know, the number one problem I hear from my clients on the funder side, they are tired of rejecting people. They're being inundated with proposals and applications. They need a way to filter them. They need to say yes better, and they need to say no less. Welcome to Orgmatch. We are the first automated marketplace that makes it fast, affordable, and fair to introduce organizations directly. The 96% of organizations who get less than half of the funding available in Canada deserve a chance to get their opportunities in front of the right people. And they need to do that through precision, not through volume. Again, that's what we've built. To date, our first phase is complete on our application. We want to eventually build the entire partnership ecosystem so that any organization that's doing community investment in their spaces are able to track the entire deal flow from end to end. Right now, we quickly ask a set of 20 questions that provide a score for your organization. We then match you with who your best predicted partners are, and we put you directly into a discovery call without any contact information being exchanged. As a funder, you only go into conversations with those you're excited to chat with, and our job is to get you excited. Right now, we're working with the University of Victoria and MyTax to build our artificial intelligence strategy. which will be complete in a few months' time and incorporated into our algorithm. $165 billion transacted last year between B2B organizations. This is organizations like your local grocery store giving money to charities. This is big banks giving money to charities. This is governments. This is foundations, family and institutional. Huge, huge market. Again, massive double-digit growth year over year. Our model, we bring people on for free. We don't believe that charging the nonprofits is the way we're going to monetize. What we do is we learn from their use on our platform, and we come in and we offer them solutions based on the problems that they're having with their partnerships. We also offer additional automated feature sets that we charge a SaaS-based $1,000 annual subscription for. This is about a third of what our competitors are charging to do less. Our goal in the future is, similar to dating applications, bringing your profile to the front of the line, having those sort of usage-based metrics that people can pay for on top of that. And then eventually, when we have the marketplace really, really sticky, we want to capture some of those transactions. We did 72,000 last year. We launched our product in October, so we're off to the races right now. 357 in our current trajectory for this year. We're starting with $1,000 ARPU. Our goal is to grow that over time through additional markets and features, the biggest of which being the United States, representing 40% of the globe. We compete with Web 2.0 products, CRMs, and databases that have been offering the same data sets for decades. We keep our data fresh by having the users update it themselves, and again, offer that automated marketplace where we put users directly in front of each other. It's not a Google search bar where you need to know what you're looking for. We ask you questions, you provide the answer, we give you the matches. I've been doing this work in fundraising and non-profits for 14 years now. That's weird to say out loud, but I've worked for large foundations, universities in Canada and Europe doing this work. My co-founder actually has a background in philanthropy as well, but he made the switch to software engineering 8 years ago. He's been building matchmaking applications like dating apps all over the world, Germany, UK, Mozambique, and just recently returned to Canada to help me start this business. $40,000 in grants last year in addition to our revenues. We've got over 100 organizations using the platform as of January, just last week. 33,000 profiles in our database. We have an additional data set of 2 million organizations worldwide that we are going to be incorporating here. Some of our users you're going to be familiar with: Sobeys, ATP Financial, United Way. So what are we looking for? We want to revolutionize philanthropy, and we want you to join us. We're just starting our fundraising right now, so this is a great time to get in early. $500,000 helps us get 18 months of runway to make the improvements we need on our product, incorporate the AI, onboard the funders, and launch in the US. Thank you for your time.
Excellent. Thank you so much, Trevor. That was Orgmatch. All right, do we have any questions? Mike.
Mentioned that your pricing is about a third of others. Why so low?
Well, we don't
Okay,
believe.
just to repeat the questions for the benefit of those people online. Why is your prices so low?
Why is the pricing so low? Well, number one, we want to provide a marketplace. We believe that is the solution. To get a sticky marketplace, we want people to have as low barriers to entry as possible. So we provide that free version. If you want to have more matches and you want to have more conversations, that's fine. You just have to go through the paywall. You pay $1,000. We also offer additional feature sets. You want reports on your impact, reports on where your investments are going, you can pay for that as well. So basically, based on what you need, we'll be able to help you through that. And if you're a small nonprofit that's volunteer run, you can use our software for free because you're still providing us a lot of value.
Yes, the question. Oh, look at those questions way in the back. Yes, you. How do you verify the reputation of a nonprofit?
That is a great question. There's two ways we do this. So there's typical charities. These are registered through the Canada Revenue Agency. Thank you, CRA. They do the work for us and they send us the data, win-win. The more challenging thing, and what we're hearing more from funders, is they want to find what's called a non-qualified donee, somebody who does not have charitable status, but has really exciting, often grassroots projects. So these organizations are usually incorporated through the Canada Corporations Act or Provincial Societies Act. So we're working with those departments to get the information that way and do that verification.
Okay. Yes, Ajay. What is your cap table looking like right now, and what's your use of funds?
So I own just over 80% of the company. My co-founder, Tim, owns just under 20%. It's vested, so his percentage is going up until August when he'll own 22% of the company. That's the cap table. That's us. So it's very, very clean. That's why we're looking for a lead investor that we can design around with so that we can keep that cap table clean and bring in the smart money. We're not just looking for any money. We want people who want to help us solve this problem. In terms of the use of funds, biggest thing, launch in the US. That's going to mean, bringing our product up to spec with what our current users need to grow our ARPU to the level that we need to launch.
Okay, Vlad. Why you?
Well, that's what I'm picking up the phone and calling people for. So this is all closed beta right now. So all of my relationships through my 14 years in philanthropy, I'm picking up the phone and calling people. That's how we got 4 United Ways on board. It's how we got Sobeys on board. So that's the way we're doing it. What we really want to do, and part of the use of funds, is going to be to launch our product to the market, get out of the closed beta, and start having more and more organizations on board. So we'll continue that direct outreach, but we also want to make sure we have a really good go-to-market that's going to bring those funders on board and get us that stickiness.
We have a question from online.
People online are asking regarding the valuation.
Valuation, again, we're going to sit down with the investors and figure that out. So whoever wants to show up and we've got an idea in mind, but we're designing that round with, again, the smart money that comes to the table. So if you're going to bring advisory services for it, we'll consider that as part of our valuation, part of our investment deal. In fact, that's what we're looking for.
Any other questions? All right, you can always think of more questions to ask Trevor about during the networking. Oh, we got one more.
I'm on the board for a non-profit sports organization that runs Park for Youth. Is that sort of organization that we could look at listing ourselves on?
Self-interested question. He
Yeah.
described
I love
himself.
that. No, that's great. Yes, absolutely. It's funny, we've had film and TV productions come to us, amateur sports teams come to us and say we want to use their product. We're saying, well, we're pretty focused on the not-for-profit space, but in your case, why wouldn't you want to partner with a Sobeys or others? Exactly.
Okay, so question from a not-for-profit. So it sounds good. This product looks good. Any other questions? One more to squeeze in.
People online are just asking about competition in general.
Competition? Yeah, so competition is largely served through customer relationship management platforms like Blackbot or Benevity, some project management software, and databases. Usually organizations will subscribe to all 3 of those in addition to having consultants and in-house staff that they're trained to use those systems. We take the best of each of those systems, bring them together, and leave out the noise.
Okay, excellent. Thank you very much. Next up is forward security, and we're going to ask Dave Thomas to give an introduction to forward security as to why we should pay special attention to forward security. Dave, over to you.
Thank you very much, Thalzel. So we met Forward Security last year through the go-to-market program that Rocket Builders runs. A lot of the tech companies here in BC. 5 things to remember: an experienced management team, a product that is just launching but is backed up by a services company that's been in the market for over 20 years. They have paying customers already and a robust sales funnel, projection of up to $500,000 in revenue for this year. And they are raising just over 500,000, but very, very good matching support from IRAP and other agencies. Ladies and gentlemen, Darshan.
Thanks very much, Dave. Hi, everybody. Very nice to meet you. My name is Farshad Abbasi. I'm the founder and chief security officer at Forward Security. We make a product called Eureka, which makes managing application and cloud security tools, processes, and issues really simple and straightforward. The cybersecurity market is fairly large. It's a fairly challenging market and it's growing. The world is rapidly digitally transforming. Everybody's building software. And of course, that means that software is under attack constantly. Since 2019, it's been the top category in terms of cybersecurity attacks, followed by malware, social engineering, and errors. Software teams often have a number of different tools that they leverage to identify security problems within their platforms. That's becoming a problem very quickly because they have a lot of data in different places and different tools, and they're not able to leverage that very efficiently to really see what the problem is. Our platform allows them to increase their profitability by more efficiently looking at the results and more quickly determining what's a problem. It reduces the risk by getting a central view across all the different tools that they use. And it helps them gain larger market share as they can win enterprise clients. And of course, it allows them to gain better privacy through our platform where we store the data in their own customer environment, unlike traditional SaaS applications. This is our Eureka platform. You can see the dashboard where it shows you an aggregated list of your security issues across the different scanners that you might be using to test your security of your applications. The market that we fall under is the global application security testing market. It's a $2.6 billion market. These are projections from Gartner's Application Security Hype Cycle report from 2022. And you can see that our service addressable market is around 221 million. So we've narrowed it down initially to North America and to companies that are building tools similar to ours. The category is called Application Security Orchestration and Correlation, or ASOC. And for the next 12 months, the market that we're servicing, or a service obtainable market, is around 50 companies that we're hitting in the finance, health, and e-commerce, and we're aiming to achieve $570,000 revenue in the 12 months. Our target persona are CTOs, VPs of engineering, directors of software engineering that work at the verticals that we're trying to target within North America. And our go-to-market strategy is that we're going to have initially 2 tiers of our product. We'll have our basic or standard tier, which is about just around $450, and we'll have our professional tier. The standard tier comes with open source solutions only, and the professional tier comes with commercial scanner solutions. Our primary sales channel is through the Microsoft Azure Marketplace. We're a Microsoft partner, and we also have a network of other partners that we leverage and existing clients. Through the last 4 years of operating as a security company, we've had about over 75 clients that are fit for this product. We've done a fair bit of competitive analysis. The summary of it is that it's a fairly new market. None of these companies have really solved the problem, and none of them have solved the problem end-to-end in a risk-based manner. A lot of them are just focusing on vulnerabilities and not on risk, which is what the enterprise is looking for. So Gartner predicts that this market is gaining commercial maturity in the next couple of years. So we're really at the right time in the right place as the world moves in that direction. So far, from a traction perspective, we've been around since 2018. The product was actually launched in 2019, but in a very hands-on version. It was bundled as part of the service. But since then, we've had about a dozen clients. Currently, we have the 4 logos that are on there, and we're doing private betas with them on the new platform. This professional services company closed at about 1.5 million in annual revenue, and about 60,000 of it was attributed to the product. You can see this is our funding to date. As Dave mentioned, we've had funding from IRAP, Shred, founder investment, product revenue, professional services contribution to the product, and BDC loan. And our milestones over the next few months are to continue our beta program, and we will be launching it as a public MVP on the Azure Marketplace as of April 1st. And we'll be using the funds for the 12 months following that initial launch to build the product further. And our ask is about $700,000. So we've done our budget for the 12 months from April 1st, 2023 to April 1st, 2024. And we'll need about $900,000. 45% will go to sales and marketing so we can get more traction and get more clients onto the platform. And about 55% will go to further developing the product and adding more features. And currently, we are asking about $700,000 at an unpriced round. So thank you for your time.
Excellent. We got like extra time for questions. So extra questions from the audience. Anybody?
Who are your competitors?
Who are your competitors?
Good question. There are quite a few. There's about 9 competitors in the market. Conduct2 is probably one of the top ones. But it's interesting because I wouldn't consider them direct competitors because there were 2 categories of software where we operate in. One is the correlation and orchestration of your security tools. What those products do is you simply plug in your software scanner, and then they aggregate all results, and they tell you, hey, here's the consolidated results. But there's also a category of tools that they help you with threat modeling and risk assessment. And there aren't any vendors that build end-to-end solutions that connect the two of them. There are products, the one company has bought two vendors that operate on either side of the fence and they're trying to merge them. But Gartner is predicting that those categories are actually joining, and the right way to do this is to bring the risk view into the vulnerability. So that's exactly what we're building. So we don't really have a direct competitor. We probably will in the near future, and that's why we got to get funding and we got to move fast. I mean, the product has been in development for 4 years, but now is the time. And they're saying that this market is about to gain commercial adoption in the next couple of years. So yeah, I think we have a great opportunity here.
Great. Yes, Gio, question.
Why did you start on Azure, and what is it going to take to port to the other
Platforms. That's actually
Why
on our
did
roadmap.
you
Really good
start
question.
on Azure, and how are you going to port to the other?
Yeah, that's a great question. So we started in Azure because in 2019, when I went down this journey, Microsoft had a startup program, and they said, hey, if you want to be part of the startup program, you got to build something on our platform. So I thought, hey, we'll pick that as our first cloud provider, build it on that, and then migrate it to AWS. Currently, we have a pretty strong partnership with Amazon. We're an AWS select tier partner. So they're pulling us to bring it over to AWS. So we're hoping that by middle of 2023, we'll also have migrated this as an offer in the AWS marketplace.
Yes, question from the back. Okay, so for the benefit of the people online, confidentiality and
Does it integrate with a security operations center? Yeah. So in terms of confidentiality, that's a really good question. One of the value propositions I mentioned was privacy. So how we've designed it is different than a regular SaaS. A regular SaaS platform stores everyone's data centrally, right? And when I worked at HSBC, by the way, for 9 years. I was the principal architect for the bank, for the global bank. And we would ask vendors, hey, how do you secure my data? A lot of the SaaS providers are like, actually, I encrypt them. I'm like, well, do you use a dedicated encryption key for every client? They're like, no, we just have one key for everybody. Problem with that is that key gets compromised. Everyone's data gets compromised, right? Our solution doesn't do that. When we stand up our solution, it actually creates a storage bucket in your own AWS or Azure account. In the case, initially we're in Azure. That's in your environment. You have control. We don't ever see your data. When the scanners run, the data gets pushed into your bucket. It looks like a SaaS solution when you're interacting with it, but when you actually click to view an issue under the hood, it's referring you to where that data is actually stored in your own environment. So we're out of the picture. So that addresses that concern. And of course, we use a dedicated encryption key in your environment to encrypt all the data for you. So that's another really good question. So we're looking at how to leverage the metadata. The big opportunity with this platform is on data. And I know the theme today is all about data and AI. So our goal is starting mid of July with some of the funds we're raising to initiate that project. So what we're planning on doing is leverage the metadata and large sets of it to make better decisions about what could be a security problem. Currently, all the developers you'd speak to, they have false positive fatigue. They buy these tools, too many false positives, they turn it off. So by leveraging large data and the metadata and AI, we'd be able to better tell you what is a false positive beyond the correlation that we're currently doing. Oh, the SOC, yes. The SOC part, we would integrate. So that is on our roadmap to integrate with GRC and SOC systems. So we would feed out the vulnerability data to those platforms. In fact, when I started this company, there was a local Vancouver company. They were building a SOC. So we started looking at the architecture, what that would look like. They didn't end up building that, but it is in our roadmap to integrate with external systems like a SOC and feed that data to them.
Okay, any other questions? You know what? I appreciate your enthusiasm, but people online need to know what the question you're answering. So
sounds good.
Yeah, so just repeat. Yeah,
Sounds
okay. I see question here.
Doing anything to help that?
So
What to do about dumb employees?
the human factor, right? So our platform doesn't operate in that space. There are lots of platforms that are used to train the human and avoid that. Our platform is working in the code space. So where the developer is writing code, we help that developer identify the mistakes better. So that is kind of helping the dumb human, if you would like to call it, because oftentimes developers don't really know. They have a million issues and they don't know what's the real problem. So we help them better identify the problems and write better code at the end of it.
Any other questions? We have just a few seconds to sneak in. Oh, I see one question.
Yes, please. So the question was, do we plan on doing any enforcement or help with remediation? Excellent question as well. So yeah, that's part of the point of this platform. So when the issues come in, after we triage them and really help you identify what are the real problems, we have integration currently with Jenkins. So we push those issues to Jenkins. It creates a ticket. We don't want to add another tool to the developer's environment. So we want, hey, you're living in Jenkins or whatever ticketing system you're using. We push the issues there. After they've been triaged, then they can go and fix them. Or you can skip them and do all that stuff within our platform.
Okay, thank you very much. That was Forward Security.
Thank you.
Next up is salonMonster, and I'm going to ask Rochelle Grayson to come up and tell us all about it and why we should pay special attention.
Good afternoon, everyone. My name is Rochelle Grayson, and I've been an advisor with actually several of the presenters today. So I'm thrilled to be here and see all of them actually in person. I'm here to basically, I advise salonMonster as part of the New Ventures BC Sales and Digital Marketing Accelerator Program. I am one of the EIRs at New Ventures BC. I'm also the developer and program chair of UBC's Data and Marketing Analytics program. And so I teach there. And so I'm really interested in today's topic. The reason I want you to listen to salonMonster is we've been hearing a lot about wonderful data solutions at the enterprise level, but what about those small businesses? What about those solopreneurs who don't have data analysts, are not data scientists, don't have time to do that and have to do everything on their own? And that's where I find salonMonster really fits in very nicely. They've created an accessible, actionable digital toolkit that helps solopreneurs, hairstylists run their business better, make more money, have fewer losses, have fewer no-shows, and use wonderful AI and machine learning tools to make it easier for them to do their job and focus on what they do best. So I find that this is a wonderful solution. There are lots of solopreneurs beyond hairstylists that I know they're looking to also support, but they are also a dynamic team. Not only do they have a great technologist, they also have someone who has over 20 years of domain expertise in the salon industry. And I think that's always a killer combination when you have teams that have both the domain expertise as well as the other things. So it is my pleasure and my honor to introduce salonMonster. I will let them now take the reins.
Thanks so much, Rochelle. When I first got here, I was really hoping that every presenter was going to get a beer from the box here when they came up to present, but it doesn't look like that's the case. All right. So I'm Steven. I'm the CEO at salonMonster, and I'm incredibly passionate about the impact that hairstylists have on people. They've certainly impacted my life. In fact, I met my wife when she was managing a salon, the salon right here. And no, I'm not married to Goldie Hawn, but this was the salon we met. It's a good story. I'll tell you about it sometime. So we tend to think of salons as a single business with employees, but today over 50% of salons are chair rental, and COVID has only accelerated this process. This is a business where independent practitioners rent in a shared space. And our team with over 50 years experience in this market is uniquely positioned to provide solutions for this. Now, unlike employees, chair renters manage everything to do with their business. They establish their schedule, they collect all the revenue, they actively market their services and their own client list. Now, why is this important? Well, first off, you need to do this to run a good business, but it's also how revenue agencies assess whether a business is an independent business or an employee. And unfortunately, all salon software is built for employee-based salons. This means we see lots of salons close due to unexpected payroll and back tax issues. And stylists lose all their data when they move locations. And stylists move a lot throughout their career. For them, their client list is their #1 business asset. And when they move and lose that data and their bookkeeping data with it, it can cost them tens of thousands of dollars in lost revenue. So what if chair renters had a digital toolkit that gave them exclusive control of their data throughout their entire career? Self-controlled payment processing to make managing payments easier and give them immediate access to their funds, and the ability to easily disconnect from one place of work and reconnect with coworkers at a new location. And for chair rental salon owners, and these are people who don't really want to manage a team of staff, if we gave them easy tools to help them coordinate their chair renters, protected them against being misclassified as an employer, and gave them an easy way to automatically bill chair renters every month, so they're not chasing down rent checks. We're making this a reality with an initial target market of independent stylists and chair renters. In North America, their software and payment spend represents a serviceable obtainable market of 102 million or a TAM of 855.
Now, other service industries face these same challenges. So once we're established, we're going to expand to others, including chiropractic and massage, for an obtainable market of 1.2 billion. The reality is these solopreneurs need enterprise-grade data management, but in a solopreneur-friendly format. This is where we come in. We make it easy to learn, easy to digest, and easy to take action on without having a degree in data science. While there's competition in the market, it's really not focused on the chair rental segment. They're focused on employee-based salons. We're currently in over 350 salons, and our customer acquisition cost is $235. We're working to reduce that with improved sales and onboarding. Our customer lifetime value is $3,500, and we're doubling that to $7,000 with the integration of payment processing revenue. Over the next 2 years, we're looking to 10 times our revenue with a goal of 15 million by 2027. Now, this isn't our first rodeo. Christine, Ken, and myself, we founded PeerStream, a peer-to-peer file hosting company that we took to over 2 million in ARR before we sold it. Ken helped me build the tech stack at BetterCart. It's a big data company using AI in the grocery space. And my team built out the original product for Campertunity, an Airbnb product focused on campgrounds based in Vancouver here. And Liam and Christine both bring over 20 years each of experience in the salon industry. We've got over $300 million in salon revenue booked currently, and we've got a low 0.8% monthly customer churn rate, giving us a 10.5-year average customer lifespan. So we're raising $750,000 to scale growth based on a $4 million post-money valuation. This is going to allow us to build out our sales and marketing team, fund our advertising, and increase our development spend to build great features like one-click online stores, automated marketing, and the ability for stylists to take voice calls and text messages right through their apps so they can separate it from their home phone. We're also working on some great potential projects for the summer with IRAP, including using AI to allow us to reduce the amount of unbookable gaps that result from online booking and to provide customer product suggestions based upon the trove of customer purchasing data that we already have in our system. We've got strong exit potential. Companies like Mango Mint just raised $13 million. They do 200,000 bookings per month. We're currently at half that, at 100,000. And Booksy just got acquired by Zenoti for over $10 million. They're in 700 salons. We're currently in 350. Our customers really love our salon management app, and we're incredibly passionate about helping these micro entrepreneurs run successful businesses. That's why we get up in the morning. I'd love to have the opportunity to connect with you and to answer any questions. Thanks very much.
All right, so it's now your chance to answer the questions.
Thanks.
Oh, I see one right in, oh, two in the back. Take your pick.
Absolutely. Yeah, right at the back there. Absolutely. So the question is, once we move into our next stage of growth, how are we going to protect ourselves against copycats? So we've got a really sticky product for a couple of reasons, and that's the first part of the equation here. So because we've got a lot of the data in there, and the more that we layer into this, the stickier we make it. Our long-term goal, we really want this to be a platform dealing with other issues that stylists have to address, like getting group health insurance and liability insurance. Things like that are really tough for stylists to get independently. The more of that we're able to lock the stylists into our platform, so we've got them for online booking, payment processing, customer relationship management, and we're looking at things like insurance. Those are all things that are going to keep them on the platform. The other aspect is we really want to encourage network effects with this, and that's the connectable plug and play aspect of what we do. So the idea is that you can give granular access to your account. So as I go into a salon, I can choose to give the front desk receptionist access to read and write to my calendar. I can also give one of my coworkers some access just to see my calendar. Let's say we share a chair. So there's a real benefit to people collaborating on this platform and having a network effect on it. We're also going to be using the salons themselves, chair rental salon owners, as part of our sales team, because if they get their team on this, they don't incur any cost, and it makes managing their day a lot easier.
Great. There was a question from the person right beside you.
Yeah.
Okay, she's got her answer. Okay, we got another question in the back here.
How do I prevent a new salon from shutting it down? Oh, absolutely. So I think the key thing in this market is we've got a couple of different business models that work in the salon market. So we've got the existing employee-based, commission-based model, and that's great. We're not trying to put employee commission-based salons out of business. Our goal is to help support this new model that we're seeing a huge amount of growth, and COVID dramatically accelerated this. We were just running a poll this last week, and over 85% of respondents said that at this point, they want to run their hair business independently. So for them, we're seeing a lot of growth in that. Employee-based salons, absolutely, they're great. And there's a ton of things that are really beneficial about them. They can invest a lot more in employee training than, say, a chair rental salon can. And those are terrific. And there are good solutions for that. What we're wanting to do is we're wanting to fill in that other situation where we've got solopreneurs cohabiting in a shared environment. Oh, I should also say we can also coordinate with those ones. We can support that side of things as well. We do end up with some blended situations where you do have part commission, part chair rental, and we can allow those to connect.
Okay, any other questions?
I think there's one at the back there. Yeah, at the back there. Absolutely. So our ask, we're looking for 750,000. We're open to closing at a lower level if we want, depending on the market situation. We know that we did have some advisors tell us to raise last year, but I've been a bootstrapper for the last 20 plus years. So it's been a bit of a learning curve for me to move into the investment side of things. And but we're going to be using those 750,000 to really accelerate our growth. So that's going to be building out our sales and marketing team. We've been interviewing a lot of marketing consultants. So we found some marketing consultants who specialize in our industry that we're going to be working with. We now know our customer acquisition cost to lifetime value. So we know the payback for that. We should have that under 6-month payback very shortly based on changes we're making. And so we know that it's worth putting fuel on that fire now, paying for advertising. And then as we grow, we need to also put a little bit of money to building out our support team to make sure we keep those clients. We don't want a leaky bucket. And then finally, continuing to develop great new features for the app.
Okay, thank you, Steve. That was salonMonster.
Thanks so much for the opportunity.
Okay, our final full presentation is Revela Systems, and I'm going to ask Amin Rajan to introduce the company.
Hi, everybody. The name is Amin Rajan. I've built and sold 3 companies, Orbital Technologies, Simba Technologies, and most recently BitQuill Technologies. Simba was in the data connectivity and data analytics space. So we used to sell software to companies like Google, Microsoft, Amazon, SAP, Oracle, every data company out there. What interested me about Revela was when we first started working with Zev, he had a real keen interest on AI and machine learning, and he spent a number of years doing consulting in the AI and machine learning space to really understand what opportunities there were. And then last year we pivoted from services to product, and we brought on Mike. And Mike has a real good bent on finding customers. I've been working with Mike for the last year, and we're in process of landing some very large opportunities. I've co-invested in Revela with Wesley Clover and Alacrity Foundation, and I think this one has a lot of way to go. Thank you.
Thanks a lot, Amin. Really appreciate that. Hi, everybody. So I'm Mike. I'm co-founder of Revela Systems. So we're a machine learning monitoring API for traditional enterprise. So co-founder Zev here beside me, he's the engineering lead. He, like Amin said, came through the UVic entrepreneurship program where they basically hand select the top software grads into the program. And then he went into about 3 years of consulting career in the AI machine learning space. So myself, I've got about 10 years of tech leadership experience through a few different companies. I've led multiple large value machine learning AI projects with, like, say, government, military, and commercial. So with our company, Revela, we've done a couple of years of this ML consulting work, which has given us insight into, say, the fintech, cybersecurity, and telecom space. And the insight we built from this was ML projects often fail because of data drift. So we'll start with a case study to understand the problem here that customers are facing. So the impact of COVID-19 on UK banks, 35% of banks in the reported study had a negative impact on their machine learning models during the pandemic. Basically, losses were incurred in the millions due to failing models in things like fraud detection, loan approvals, or stock trading, which is areas that the banks use ML models quite frequently. Why does this happen? Well, ML models are only as good as the data that they're trained on. As time goes on, the world changes and the models start losing their accuracy. Here's a snapshot of the market that we play in the big blue circles on the side. The machine learning market as a whole. There's the ML tools market, which is generally infrastructure tools, a couple different layers to that. And then our layer is the machine learning monitoring part, which is the final end of that ML process. So last year, the market, our immediate monitoring market, was about 651 million total addressable. That's going to be growing up to 1.2 billion in about 3 years. And you can see the overall growth rate is 890% over the next 7 years. You've just seen it tonight, all the different statistics that they've shown you. The industry is absolutely taking off, and we're the infrastructure for that entire industry. So what's making this problem compounded for our users? Well, only 26% of teams are satisfied with their investments. Sorry. Only 26% of teams are satisfied with their ML investments. So what's our service, our solution to this? Well, monitoring. We can detect model drift before the business is negatively impacted. We also are bringing in some generative AI into our own product to help predict future model failures. Think of it as predictive maintenance for your AI, using AI. Our unique API-first architecture allows for very quick adoption and organizations to achieve compliance that's going to be coming to the pipeline. We also are very, agnostic to the dashboards that people use, being that API architecture. So we bring our model monitoring engine to the platforms that teams are already using. So here's some benefits for our target audience, which is groups like banks, telcos, and say energy utility companies. We improve their ML models, which helps them, achieve a better ROI on their ML investments, which are absolutely enormous these days. We help them save on their resourcing. So if they're doing monitoring currently, it's definitely manual, and they have data science teams essentially going in and retraining these models periodically. We can save them from that custodial type work. Showing compliance is really important, especially for like groups in finance sector. AI Bill of Rights in the US, Bill C-27 in Canada, that's all coming to the pipeline, and model monitoring is explicitly written in there as a requirement for these groups. Protecting reputation. No one wants to be the next, PR release about some biased model impacting their customers. So we help avoid that. Here's our go-to-market. Here's us in the red. 70% of our focus is just direct to enterprise currently. And then about 20% is this OEM model, because again, we're API first. We can plug into other upstream platforms as well and leverage their front-end facing dashboards. We also have a 10% of our energy is going to this open beta program, where we tend to go to, say, open source software communities just to drive traffic on our, say, SaaS version. This also is good visualization of our exit strategy. So because we're, again, that OEM partnership, there's acquisitions happening in our space pretty regularly right now. Even in the last couple of months, there's some big ones. And as was notified in the previous presentation, 3 to 5 years is definitely a range that we could see an acquisition happening very quickly. Some highlights on our traction. So as Aminan mentioned, some really exciting deals in the pipeline. We've been down selected for a POC with a very large Canadian bank, like top 3. That is due to happen in March to start there. We've got multiple of these OEM contracts to review, and here's a proportion of the banks versus telcos. Competition is we're the only API first option, giving the flexibility users want. We're low barrier, which is really good for integration. And we're primarily on-prem deployment, which is necessary for their requirements and security. What we're looking for here is we're looking for another $200,000 to go towards our safe at a 20% discount, 4 million cap, to complete that POC at the bank, acquire a provisional patent to build out a generative AI feature, fundraise for an additional 800 to 1.2 million seed round, which we're aiming for end of kind of Q3 of this year. We already have $200,000 closed on the safe, and we're looking to wrap that up by March 31st. And below, you can see some of our current backwards, Alacrity Canada, Wesley Clover, Mauvin, and the Entrepreneurship Fund, among a few angels like Amin. Thank you.
Thank you very much. That was Revela Systems. Questions? Yes, Gio.
Yes, how do you actually integrate with customers' AI platform? Are you running on premises, or is it something that's you're running on your own premises?
How to integrate for the people online?
So basically, the on-prem versus say like a SaaS model, primarily on-prem right now, and that's what does make us unique in the marketplace. Almost all of our competitors take a SaaS first model, but because we've chosen to pursue like the high security, like financial institutions, telcos, it's a non-option. They will not even consider, even your SOC 2 compliant, that might even not be good enough for them. So we focus on this very easy deployment. Zev can go much more detail about that for anyone interested on the technical side. But we basically packaged as a, get it onto your infrastructure. We're not looking at your data. We're not going to ask a bank to send us their data. They leave it there, and we just help them service that product.
Yes.
So are you asking if they're like a similar blueprint for each? Okay. So far, the most exposure we've had is in the banks and the telcos, and a little bit in the energy side, oil and gas such. So far, it's been pretty similar because we're model agnostic. Like we don't actually care the way our system is built. We don't care what type of model, whether it's a linear regression model predicting some data point, or if it's like a a computer vision model or a large language type thing. It doesn't really matter to us. We look at the data very agnostically. So, but we do tie into business KPIs, which is really important. So companies can track, change in like revenue, for example, and correlate that against their ML performance, which is extremely important for the machine learning data teams and their upper management to understand, is my ML investment in this very expensive team actually having a business impact? And we can show them that, yes, in fact, it can, or maybe not. And they may want to take a different approach.
Yes, sir.
So you had mentioned that for the data scientist teams that are there, they don't have to spend as much time retraining the model, right? Because the models kind of deviate over time. But if your product just tells them what the deviation is, will somebody still need to go in and correct the models?
That's correct. Yeah. So currently, so the question was, people have to retrain models anyways right now, and we're not necessarily replacing that effort of retraining the model, and that's true. But what people are doing right now is they do it based on a schedule. So they'll arbitrarily retrain a model every quarter or every month, and they're not actually training based on how the model is performing. So it's like scheduled maintenance, if you want to look at it that way. What our system allows them to do is actually predictive maintenance. You train the model when you should train it because the data has declined, the drift has occurred. You can expect the model to have maybe poor accuracy, and we can actually validate that poor accuracy if the ground truth comes back, where we can actually say what was the real prediction compared to like a human's assessment of that. So yeah, so it's basically converting from a scheduled maintenance program for your AI to more of a predictive, proactive maintenance program, which definitely can save a lot of money.
Just one more follow-up. As far as deployment goes, how is it out of the box, or is there some professional services involved? How easy is it to deploy in customer environment?
Yeah, so it's fairly easily. Maybe Zev, do you want to kind of?
Sure. Oh yeah, stand in the box, right? Deployment is fully Kubernetes native. So if you can one-click deploy an app on any of your favorite clouds, then you can deploy our chart and you're good to go. So deployment is aiming to be as simple as it can be, mostly because we're targeting sort of like the large enterprise, but the teams within those need to use and love our products. So it should be super easy to deploy and use again after. So.
All right. Thank you very much. That was Revela Systems. We're out of time for questions now, but we're going to be reconfiguring the room. Okay. Put this. Okay. So we're going to be reconfiguring the rooms. Look for your favorite presenters behind the table there. and you can pepper them with even more questions. That's concludes today's Angel VANTEC meeting. And like to, it does take a village to help these entrepreneurs, but it takes almost as many people to put this meeting together. So I'd like to give a shout out to the people that are on the VANTEC team. That's Yush, Peter Wilkins, and Charles Brooks, who greeted you at the door. Roger Killen, Frank Leffler, Mateus, Jackson. These are all people that helped out, and Mike Volker and I, Thelzali, are really happy to have you come to the VANTEC Angel Network meetings and hope to see you next month, March 1st. Thank you.